Yeah, their music sucks. I got a better song. Way better song.
J-Squad.
Gonna be so goddamn rich.
I think it's time to blow this scene. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Gonna be fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich. Great. Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't you?
yelling, cowboy, give me the fucking money. Get the goddamn money printer out.
Great. The bounty cutter.
We're gonna be so fucking rich. Get the goddamn money printer out. You get a fucking mic check. Microphone check. Sounds good, but I got no desktop audio. It's fucking insane. There it is. We're good. Everything is in order, my friends. Don't you worry your little heads. Thank you. Alright, so we can look at this boring old black and white report, but my friend Pantheon AMC has gone through the trouble of writing some much better information.
On the popcorn side.
On the popcorn side, that's right. So let's just start with real quick. Revenues last year, in 2021 were $2.5 billion. Revenues this last quarter, 2022, were $3,911.4 million. A massive jump, let's see, from about the year prior, of almost $1.45 billion. $1,450 million more. And that's why this stream says the meme. I don't always say I told you so, but when I do, that's because I told you so. Mainstream media is trying to play this off as a slight earnings miss, but it was still fucking phenomenal as long as if you ask me. Total revenues are still catching up to the fourth quarter of 2021 for the fourth quarter, but for the full year, they were significantly larger. So even though the fourth quarter for 2022 was a little bit weaker than it was in 2021, the entire year itself of 2022 compared to 2023, revenues were 3.9 billion compared to 2.5 billion in 21. So that is fabulous. They also had a net loss of 287 million, which includes the non-cash impairment charge related to long-lived assets of 133 million, which was a slight increase from 2021. But they also had an adjusted net loss of 152.9 million compared to 57 million in the fourth quarter of 2021. All right, let's take a look. EBITDA was 14.5 million compared to 159 million for the fourth quarter of 2021. But as you know, if you're an AMC investor, they have been buying a significant number of theaters, and they have been paying off a significant number of debt. They've paid off hundreds of millions of dollars of their debt, and that increases their net loss for the fourth quarter of 2022. So don't believe the FUD saying that AMC is losing money. AMC is simply paying off debt, which on the balance sheet looks like a loss in the fourth quarter. MC, thank you for your support, my friend. You are too kind. Operating cash burn generated for the quarter was 57 million. Net cash used in operating activities was 33.3 million. Available liquidity as of December 31st, 2022 was 842.7 million, including 211 million of undrawn capacity under their revolving credit facility, which is all pretty good. And if people are smart enough to vote for the conversion or reverse split of APE to AMC and the dilution of AMC to allow them to sell debt, sell some of their shares on the market to pay off some of their debt, then it would just help the company out even further. Now, taking a look at the popcorn side, this is fabulous, Pantheon. Man, these are some fabulous examples, and I think people are totally getting it wrong and don't realize that, we don't need to have the whole popcorn market, right? Just a small, tiny percentage of it from Orville Redenbacher and stuff, right?
Yeah, we're getting, we got some examples to run through, you guys. We still have some time before the fourth quarter earnings call starts. There's a lot of people out there excited about the popcorn, and they should be.
Yes.
But they're also throwing out incorrect numbers, right? Looking at the global market share of popcorn and throwing out numbers like $8 billion. We just have to be realistic, right? We started this whole effort on February 18th, 2022, when Ellen Kopikin got hired. Right? She spent 5 years at Sterling Rice Group. She was with Hostess Brands. She was Frito-Lay. So she's definitely the person who's got the right stuff for this whole brand to blast off. Weaver Popcorn supplies all the popcorn to AMC. They guaranteed they had all the capacity. Vistar does all the logistics. They already deliver 35-pound bags to AMC locations. To add that to Walmart shipping is not a problem at all. Looking at the numbers on the screen that you've got there, is we know that the market share in the U.S., and they're only selling popcorn in the U.S. unless we hear different today. That's what they've told us previous, is the market share in the U.S. is 95% controlled by two entities, Top Secret and Orville Redenbacher. Can we take some of that market share away? Absolutely. Will it happen on day one? Probably not. It's a recognizable brand with AMC, but we just have to be careful. So looking at how everybody except two entities has 5% of the market share, let's go through some numbers. If AMC gets 0.5% of the market share, it would equate to about, and I'm using 75% profit margins while others say 90. We're just being, we're just keeping it down a little bit, just being a little bit more to earth on it.
So you're being ultra conservative with only 75% profit margins instead of the actual estimates of 90%.
Ultra That's conservative. Nice. That's the way I run my life. So, so if 0.5% would be about 8.6 million profit per year, right? 2.5% brings you in profit of around 43 million or more. 5% of the market share in the U.S. would be $86 million.
In profit, not revenue. Profit.
We're talking profit. Exactly, my man, profit. If you get to 7.5%, which is on slide 2, it's 129 million. Something they're already doing and already had the capability to put out there. Why not just do it the way? Why not build the brand? This is exactly what they should be doing. 10% would be about 172 million, and 15%, just 15% would be $250 million a year. We're not talking 8 billion a year on popcorn sales, folks, but they can get there. They can get there. They could eventually reach larger numbers. So we're being, again, real conservative with these numbers. It's stuff you should be excited about because that's money that they should have been making all this time that they weren't, and they're going to be. And that's great news. Great news.
So using this calculation, if they only get 10% of the market share, they're going to make over $170-something million, just using 75% profit margin instead of their estimated 90%. That's fabulous. And then if they sell $345 million worth, which would be 15% of the American popcorn market, not including the rest of the world, just the USA, we'd be looking at around $258.75 million.
Call has started.
The entertainment. 2022 marked another year of significant strategic, operational, and financial gains for AMC Entertainment. With our 2 announcements today on Q4 2022 earnings and of the launch of AMC Perfectly Popcorn at more than 2,600 U.S. Walmart stores, once again, AMC is demonstrating unmistakable progress along our multi-year pandemic recovery glide path. In my opinion, there are 5 reasons why AMC shareholders should be especially excited and smiling today. First, the increasing size of our industry as it recovers. Second, AMC's performance in Q4. Third, the fact that we are outperforming our competitors. Fourth, our agility in raising cash and reducing debt. And fifth, this morning's Walmart AMC Perfectly Popcorn announcement. First and overarching is the size of our industry itself, which is increasing. For 5 consecutive years prior to the pandemic, from 2015 to 2019, the domestic box office, which is all theaters, all brands across the United States and Canada, exceeded $11 billion. It was $11.4 billion in 2019. But then COVID came and brought our industry to its knees. And the 2020 domestic box office was only $2.2 billion. Down, as we all know, a breathtaking 82% year over year from the pre-pandemic level in 2019. Since then, our industry has seen a steady growth trajectory. The 2021 domestic box office was $4.5 billion, more than double that of 2020. And 2022's full year domestic box office of $7.4 billion was about 65% higher than 2021. The numbers again, $11.4 billion in 2019, falling to $2.2 billion, rising to $4.5 billion, rising to $7.4 billion. Based on the box office results so far in the first quarter of 2023, which is already up 44% year over year, combined with a much larger number of broader and deeper movie titles to be released in the coming quarters, based on what we know today, the 2023 domestic box office will almost certainly be significantly higher in 2023 than that of 2022. You all know that we finished 2022 and started 2023 on a very strong note with what is already the 3rd highest grossing film of all time, James Cameron's epic sequel, Avatar: The Way of Water. It really is a testament to the genius of James Cameron that he is responsible for 3 of the 4 highest grossing movies in the history of cinema. I digress for a moment to say thank you, Jim Gambrin, and thank you to your producing partner, John Landau. It won't surprise you both to hear that you both are greatly appreciated by AMC and by the millions of AMC shareholders and the millions of AMC moviegoers. Please, please, Jim and John, keep making more movies. Speaking of more movies, that's one of the key stories of the coming year, 2023. The incredible Tom Cruise's Top Gun Maverick, which grossed more than $1.5 billion in movie theaters in 2022, and Avatar: The Way of Water, which has already grossed almost $2.3 billion in movie theaters in only 11 weeks, among many other successful movie releases, they all prove that moviegoers no longer are afraid to go to a cinema to watch a movie, as they once were afraid in the darkest days of 2020 at the height of the pandemic. Our problem now in generating attendance in theaters is quite different. Instead, it's simply that Hollywood has been releasing fewer movies of late. Depending upon how you count, the number of major movies released in 2022 was somewhere between a third and a half fewer than the total number of such major films released in 2019 before the pandemic. So, in the just completed 2022. That is an increase in 2023 of about 75% of the number of movie titles grossing $100 million or more. Let me repeat that. We are expecting in 2023 about a 75% increase in the number of major movie titles grossing $100 million or more compared to last year. The second reason for our enthusiasm is that AMC posted much improved results for the fourth quarter of 2022. Naturally, we're pleased that AMC Entertainment easily bested consensus estimates for Q4 2022 revenue and for Q4 2022 adjusted EBITDA, as well as posting a beat on adjusted net income and EPS for 2022 Q4 after excluding for non-cash impairment write-offs. We are similarly encouraged that Q4 2022 revenue per patron of $19.98 was well above pre-pandemic levels, thanks to rising ticket prices and the consumers' continued predilection to indulge more at our concession stands in our high-margin food and beverage business. AMC's full year 2022 results represented our strongest year since pre-pandemic 2019, with 2022 results improving over 2021, which in turn were better than those of 2020. Indeed, in full year 2022, AMC saw our annual revenue increase by more than 54% year over year, and our adjusted EBITDA improved in a single year by more than $338 million versus 2021. That's an enormous increase.
$338 million increase in
The
adjusted
third reason
EBITDA.
we are smiling today is that as the world's largest theater chain, we are outrunning our competitors. Number two, Regal Cineworld is in bankruptcy court because they essentially ran out of cash in September. By contrast, AMC has been masterful in raising equity as needed, and we ended 2022 with over $840 million of cash in the bank or undrawn revolving credit lines. As for number three operator Cinemark, we encourage you to look at the Q4 metrics where we overlap in the United States. Average ticket price, AMC, $12.22, Cinemark, only $10 even, $12.22, $10. Food and beverage per patron, AMC, $7.76, Cinemark, $7.43. Total revenues per patron, AMC, $21.85, Cinemark, $19.35. Film exhibition costs, and this is one where you want the number to be low, not high. AMC, our film exhibition costs were 51% of our admissions revenues. At Cinemark, it was 58%. Our fourth marker of progress at AMC has been our ability to strengthen our liquidity profile and balance sheet. Over the last 12 months, AMC has raised approximately $314 million in gross cash proceeds, and we've also reduced the aggregate principal balance of our debt by approximately $390 million since the beginning of 2022.
Paying off debt, baby.
And as for that fifth reason for smiles today, the exciting popcorn announcement this morning, we are launching with Walmart. What an enormous vote of confidence that's coming to AMC from the largest retailer in the United States in the quality and consumer appeal of our new microwave and ready-to-eat popcorn. I'll come back to that and other essential topics after I return, but right now let's pass the call over to Sean Goodman, our CFO, to review our financial and operating results in more detail. Sean?
Thanks, Adam, and thanks to everyone for joining us this afternoon. 2022 was a year of growth and recovery for AMC. During the year, we welcomed 201 million guests to our theaters around the world. That's a 56% increase compared to 2021, and it's 72 million more guests than in 2021. This attendance improvement, coupled with strong admissions and food and beverage revenue per guest, translated into a $1.384 billion increase in consolidated revenue, representing a 54.7% increase compared to 2021. And likewise, 2022 adjusted EBITDA improved by more than $338 million to a positive $46.6 million. This compares to a loss of $291.7 million in 2021. Clearly, our recovery is continuing in earnest. Now, looking specifically at the fourth quarter of 2022 compared to the same period last year, the North American box office declined by 14.5% to $1.8 billion. And this was due to the relative strength of Spider-Man: No Way Home in 2021 and the limited number of new titles available for release in October and November of 2022. Our fourth quarter consolidated revenue declined by $181 million, or 15.4% to $991 million. However, on a constant currency basis, consolidated revenue declined by 12.4% as we outperformed the overall industry because of strong operating performance metrics. For the fourth quarter, on a constant currency basis, total consolidated revenue per patron was $20.69. This is approximately 5.4% higher than the fourth quarter of 2021. And this was driven by admissions revenue per patron growth of 5.1% and food and beverage revenue per patron growth of 7.8%. It is worth noting that consolidated constant currency revenue per patron in Q4 of 2022 was 30.8% higher than pre-pandemic in 2019, indicative of the tremendous growth in revenue per patron during our recovery period. Domestic revenue in Q4 declined by 10.7%, with admissions revenue per patron increasing by 6.2% to $12.22, and food and beverage revenue per patron increasing by 7.7% to $7.76. In addition, other revenue per patron increased by 6.3%. In the international business, on a constant revenue in Q4 declined by 16.6%, with admissions revenue per patron increasing by 2.2% to $10.70, and food and beverage revenue per patron increasing by 7.4% to $4.98. Other revenue per patron decreased by 8.8% as theater rental revenue generated during 2021 was replaced by regular admissions and food and beverage revenue. We continue to generate strong growth in revenue per patron as our guests enjoy our innovative food and beverage offerings, including movie theater-themed cocktails and collectible items. Our initiatives to optimize admissions revenue, including blockbuster pricing, are yielding positive results, and the increased adoption of our industry-leading AMC app and our marketing initiatives are all helping to drive overall revenue per patron growth. And this growth is further supported by increased premium format, or PLF, penetration, with PLF attendance representing 25.5% of domestic attendance in Q4 2022 compared to 19.8% in Q4 of 2021. And in our international markets, premium format attendance represented 18% of attendance compared to 10.7% in the fourth quarter of 2021. So clearly guests are increasingly appreciating the premium experience offered by our IMAX, Dolby, and AMC Prime offerings. Looking forward, we will maintain our focus on the guest experience that supports the strength of our key performance metrics, including 1, ongoing enhancement of our loyalty programs and the functionality of the AMC app. 2, innovative food and beverage offerings. 3, investing in providing the best possible sight and sound experiences through advanced laser projection technology and premium offerings such as IMAX, Dolby, and AMC Prime. And 4, growing revenue through diversification initiatives such as retail popcorn, the AMC credit card, renting out our theaters during off-peak times, marketing, and promotional initiatives. All of the above to be achieved while paying very close attention to our overall operating efficiency. Let's talk about the balance sheet now. We ended the quarter with liquidity of $843 million, comprised of $632 million of cash and cash equivalents and $211 million of undrawn credit facilities. During the fourth quarter, net cash used in operating activities was $33.3 million, and we achieved positive non-GAAP operating cash generated of $57.5 million. And we define operating cash generated as cash from operating activities plus total capital expenditures before debt servicing costs and before deferred rent payback. During 2022, we were active in the capital markets as we took actions to strengthen our balance sheet. In total, in 2022, we raised $229 million of gross equity capital. We refinanced $1.4 billion of debt. We extended certain debt maturities through to 2026 and beyond. And we repurchased $123.5 million of debt at an average discount of 43.7%. The net result is a $220 million reduction in the principal amount of interest-bearing debt outstanding during 2022. And during 2022, we also strengthened our balance sheet by repaying approximately $158 million of deferred rent. And this reduced our deferred rent balance to $157.2 million at December 31, 2022. You may recall that back in March of 2021, this deferred rent balance was more than $470 million. So over the last 21 months, we have lowered our deferred rent liability by approximately $313 million. All told, if we include the decrease in deferred rent, we reduced our liabilities by a total of $378 million in 2022. And in addition to that, so far in the first quarter of 2023, we have raised another $84.7 million of gross equity proceeds. And we have reduced the principal balance of our debt outstanding by an additional $170.2 million through the exchange of debt into equity and capitalizing on opportunities to repurchase debt at a discount. These actions in the first quarter of 2023 so far take our total debt reduction to $548 million when we include the reduction in deferred rent liabilities, and our total equity capital so far raised to $314 million. Note that during 2023, we plan to further reduce the deferred rent balance by another $75 to $100 million, and this will reduce the liability to approximately $60 to $80 million by the end of 2023. Regarding capital allocation, our priorities remain unchanged. 1, we need to maintain sufficient liquidity to manage through the recovery phase of our business. 2, we need to strengthen our balance sheet by extending debt maturities, reducing debt, and reducing associated interest costs. 3, invest in our business to continue to enhance the guest experience. And 4, opportunistically pursue value-enhancing initiatives, including those that lead to diversification of our business and revenue streams. Having the flexibility to raise equity capital allows us to opportunistically take critical actions to strengthen our balance sheet and at the same time successfully navigate through the ongoing recovery of our industry. For these reasons, I would like to take this opportunity to urge shareholders to vote in favor of the proposals that will be voted on at the upcoming shareholder meeting on March 14th.
Fucking vote yes.
These proposals are
yeah.
designed to protect the long-term value of AMC equity and provide us with the flexibility necessary to ensure a successful recovery from the ongoing. Our capital expenditure, net of landlord contributions, was $69 million in the fourth quarter of 2022, and we finished the year with a total net capex spend of $182.1 million. And similar to 2022, looking towards 2023, we expect our capital expenditure to be in the range of $150 to $200 million. Actively managing our theater portfolio continues to be a priority as we add new high-performing locations and eliminate low performers, all with the goal of improving our guest satisfaction and enhancing our overall profitability. During the fourth quarter, we added 5 new theaters and we closed 9. This brings the total number of locations closed since the pandemic began to 115, and the total new locations opened to 54 for a net reduction of 61 locations. The combined 54 new locations continue to substantially outperform the 115 closed locations prior to their closings, and they also are outperforming our underwriting expectations. Looking forward, we're optimistic about the future and the opportunities to strengthen and diversify our business while continuing to enhance our financial position. So with that, I'll hand the call back over to Adam to review some exciting recent announcements and provide an update on our strategic initiatives, including our upcoming stockholder meeting. Adam.
Thank you, Sean. As I said at the top of the call, at AMC we're all smiles today, but by no means are we out of the woods yet. We will need to remain smart and action-oriented to successfully chart our way through what are still COVID-impacted waters. But clearly, we have been and are now making great progress. And while we have much more work ahead of us still, my ongoing conversations with our studio partners, including some as recently as this weekend, buoys my optimism that more movies are indeed headed to theaters and that the value of theatrical exhibition is clearly recognized and internalized by the heads of every single major studio. As the leader of AMC, I am proud that we have resiliently weathered many a storm over the past 36 months. A storm first of the virus itself, then the threat to exclusive theatrical windows. More recently, the conviction held by some that streaming services would win out over theaters, and all through it was the concern that there would not be enough cash in the coffers for AMC to outlast all that we had to stare down. What's more, there was the added complexity for us of doing something well that few, if any, companies ever thought about before: how to adjust to a whole new cadre of millions of individual shareholders taking ownership of our company. Fortunately for us, the people who predicted that we could not weather the storms were all wrong.
38 million.
And more fortunately for us, those new retail investors turned out to be the saviors of our company. Their passion for AMC saved our company as they provided us with the cash resources we needed to survive. They also flooded us with some truly great ideas, including one of my personal favorites, that we should sell popcorn to the home market in what is, after all, a multi-billion-dollar category. This morning's exciting news announcement that the retail launch of AMC's microwave and ready-to-eat perfectly popcorn is at hand, and exclusively with the nation's largest retailer, Walmart. It keeps a promise to do so that I made 16 months ago to our shareholders, and it's yet another example of AMC's powerful commitment to innovation. Beginning on March 11, just ahead of the Oscars telecast on March 12, AMC's ready-to-eat popcorn will be available exclusively at hundreds of Walmart locations on much sought-after featured end cap displays. In the weeks that follow, AMC Perfectly Popcorn will hit the shelves again exclusively at more than 2,600 Walmart stores in the United States, with 3 varieties of ready-to-eat popcorn in the following flavors: classic butter, extra butter, and for those seeking a lower sodium solution, lightly salted. The ready-to-eat varieties are expected to be priced at $3.98 per bag, plus tax, and they all offer the authentic taste of real AMC movie theater popcorn to be enjoyed anywhere. Then, our microwave AMC Perfectly Popcorn will become available at Walmart. Again, in the same 3 flavors: classic butter, extra butter, lightly salted. And they are expected to retail for $4.98 plus tax for a 6-count box. As an added and unique benefit, the extra butter microwave boxes will include 6 packets of additional buttery topping that eaters at home can use to slather all over their popcorn, truly replicating that ultimate AMC movie theater popcorn experience. This first-of-its-kind approach by a theatrical exhibitor to distribute ready-to-eat and microwave popcorn at retail outlets all across the country further differentiates AMC as the undisputed leader in this industry and greatly extends the visibility of the AMC brand. Another idea that came to us from our investors was to sell AMC and movie-themed merchandise. We are doing so now across the United States and online. As every major movie releases, as every big tentpole releases, we have something themed for that film. And it's but one of many such examples of success here are, if you can believe it, Ant-Man popcorn helmets have been quite popular, selling almost $2 million worth in less than 2 weeks. This has proven to be such a successful concept that we're about to launch the same activity across our theaters in Europe. Thank you, retail shareholders, for the idea. Next on the innovation docket is the launch of our new co-branded AMC Entertainment Visa card, coming soon to a wallet or a purse near you.
I signed up for mine.
It's been designed to
AMC
drive
Visa.
increased AMC brand loyalty, along with incremental attendance to our AMC theaters, and should generate attractive financial returns with very little risk to boot. And finally, we recently announced a potentially important development. We announced that we are testing sightline seating at AMC in some of our theaters in New York, Chicago, and Kansas City. New York and Chicago because they're big cities in the United States, Kansas City because we're headquartered here and we ourselves want to walk into our theaters and talk to our guests and gauge their reactions directly and firsthand. The test is being done for a potential nationwide rollout later in 2023. With sideline seating, as you know if you saw the release, we are charging a slight premium for the most popular seats in an auditorium, but discounting the prices of less popular seats closer to the screen up front. This is in line with how other sellers price their seats for live theater, for concerts, for sporting events. It's also how we've been pricing movie theater tickets in Europe for many years. We do understand, however, that this is a substantial change to the status quo for U.S. moviegoers, so we'll be watching very closely how moviegoers react to the changes that are being tested right now. We will report back to you in future calls what we're seeing in the tests, and we look forward to this thing working well for the benefit both of our moviegoing public and for AMC. AMC's ability to continue to raise capital during our ongoing recovery makes all these potentially transformative innovations and new actions possible, and it is crucial to our future success. To that end, I'd like to utilize the remainder of my formal remarks today to discuss the upcoming March 14 special stockholders meeting and the importance of the proposals on which our shareholders are already voting. Last August, we issued 516,800,000 APE preferred equity units as a dividend to holders of our AMC common shares on a one-for-one basis. The primary goals of issuing the APE dividend was to provide AMC with a new currency that could be used to strengthen our balance sheet by generating cash, bolstering our liquidity, to reduce our debt, and to allow us to grow. Since September of 2022, the creation of APE units resulted in AMC successfully raising $314 million of gross cash proceeds and allowed us to reduce the principal balance of our debt by more than $221 million, most of which was profitably repurchased at a substantial discount. Indeed, AMC is unequivocally a stronger company today as a result of the creation of the APE dividend, and it's allowing us to raise cash and reduce debt. I might add that came amidst a lot of press speculation that we'd be unsuccessful in doing so. To the naysayers and doomtellers, you know what I say. Choke on that.
Choke on that
However, despite having the same economic and voting rights as our AMC common shares, APE preferred equity units have consistently traded at a mysterious and substantial discount to AMC common shares. This discount creates inefficiencies that increases our cost of capital and causes unnecessary and preventable dilution. So, after careful thought, the AMC Board of Directors is presenting important proposals for shareholders to vote on at the upcoming special meeting on March 14, 2022. These proposals are designed to protect the long-term value of a shareholder's investment in AMC while still providing AMC with the flexibility necessary to continue along our recovery trajectory in a challenging environment. As you already know, the two key proposals are: 1, increase the number of authorized AMC common shares from 524 million to 550 million, and combine the AMC common shares and 8 preferred units. Second, to effect a reverse stock split of 1 share for every 10, which together with the increase in authorized common shares permits that automatic conversion of APE units into AMC common stock. Our board and I strongly believe that it's in the best interest now of AMC shareholders to convert APE units into AMC common shares, thereby simplifying our capital structure and eliminating the gap between the prices of APE units and of AMC shares.
Eliminating the gap.
As AMC's single largest individual shareholder, with millions of AMC shares and APE units, I have a vested interest in the outcome of this election because my net worth rises as AMC strengthens, and my net worth falls as AMC gets weaker. I currently own outright some 3.7 million AMC shares or APE units,
We are the
and have a further economic interest in an additional 4.5 million APE units or AMC shares as a result of granted but unvested stock. In total, I have some 8.2 million AMC shares or AMC units. You know what that means? It means that my interests are directly aligned with those of our shareholders. I am not some hedge fund plant or Trojan horse,
That's right.
as a few of the more bizarre conspiracy theories go. I'm on the side of the retail investor because I am myself a retail investor. And I'd like to share with you the 7 reasons why I have voted yes, voting for the proposals that are being recommended by the board. Before I do so, however, I should point out that litigation has been brought in the Delaware Court of Chancery attempting to block our shareholder proposals and your right to vote on them. We believe such litigation is without merit, that our actions have been totally lawful and consistent with our charter, and we will vigorously defend our position in this matter. The court has ordered that the March 14 vote shall take place on schedule, but that any implementation action resulting from the vote be held in abeyance until the court rules on the substance of the claims being made. So the vote is on, and it is on now. I urge our shareholders to vote now so that your voice can be heard. And because I think it's the right thing for me to do and for you to do, I urge you to vote for the proposals with me. Here's why. First, a more resilient AMC. Having the flexibility to efficiently and opportunistically tap both the equity and debt capital markets results in a more resilient company. Were it not for our ability to have raised both equity and debt over the past 3 years, AMC would not have survived the pandemic that caused a material decline in our business activity. Second, reduce capital raising inefficiencies associated with APE units trading at a discount to AMC shares. Converting APE units to AMC shares will result in a single price for all AMC equity. This single price eliminates the inefficiency inherent in the discount between APE units and AMC common stock and will allow AMC to more efficiently raise equity capital at the most attractive terms in the future. Third, enhance the ability to raise cash and increase liquidity. Well, I believe AMC is currently in a strong liquidity position with more than $840 million of available liquidity at the end of December 22. The ability to efficiently raise additional liquidity when needed has proven to be critical for this company in the past. And depending upon the path and timing of recovery, may be critical to our survival again in the future. Fourth, strengthen AMC's balance sheet. AMC's balance sheet is expected to strengthen over time as the box office grows. At the same time, as we have demonstrated in recent months, there continue to be attractive opportunities for us to use available equity or equity proceeds to buy back debt or exchange debt for equity at a discount to face value, which greatly benefits shareholders. Fifth, simplify ownership in AMC. Consolidating ownership of AMC into one single class for all shareholders eliminates the added complexity that some brokerages have imposed on their clients in the holding or trading of our preferred equity securities. In addition, the single class of equity eliminates the potential for hedge funds or other investors to engage in arbitrage trading strategies between the APE and AMC securities.
Let's talk about brokers. I won't let you buy
Six,
AMC one.
position AMC to transform into a stronger, more diversified company. A single equity class will better allow us to pursue attractive shareholder value creation opportunities, to diversify and to transform our business. And last, seventh, create long-term value for AMC. A vote for the resolutions is a vote in favor of the long-term value of AMC. Since we announced our intention to hold a shareholder vote to convert APE units into AMC shares, the total equity value of our company has increased. The other matter of consequence being discussed at the March 14 shareholder meeting is the 1-for-10 reverse stock split. So let me quickly address that topic. If you have 10 $1 bills in your pocket, and you exchange them for one $10 bill, you still have $10 either way.
We said this fucking exact same
If
shit.
you would have 10 $10 bills in your pocket, and you exchange them for one $100 bill, you'd still have $100 either way. This reverse split in and of itself should be neutral. However, for a variety of reasons, including the technical listing rules of stock exchanges, we think it's unwise for our shares to be trading at levels in the single digits. The reverse split also creates room to allow for the full conversion of APEs into common stock, which we also think is a good idea for each of you, as I previously explained, and creates the capacity for common stock to be issued as equity in the future. In my view, I believe that there's no compelling argument why our shareholders should generally be averse to a reverse stock split. As I stated earlier, having the flexibility to continue to raise capital as we navigate through our recovery is crucial to AMC's future success and has thus far kept us from the fate of several of our competitors who have been forced to seek bankruptcy protection. Were we to be somehow deprived of this cash-raising capability, our future may not nearly be so bright as it appears currently. Indeed, our future could turn quite bleak in just a blink of an eye. I cannot emphasize enough that while things are looking up now, our success could literally vaporize in an instant if we misstep. The reason we have succeeded to date is that, in our opinion, we have threaded the needle perfectly heretofore during this pandemic. But make no mistake, the need to continue to thread the needle perfectly going forward is unchanged at AMC Entertainment. Fortunately, we're pretty good at this, and we've been at it a while, and we know what we're doing. I know I have about 3 or 4 million friends out there who like to give me advice, but I'd like to remind you we've done a pretty good job of stewarding this company during tough times. Avoiding a dire fate is a commitment that I personally made to our shareholders in the earliest days of this global pandemic, when our revenues went to zero overnight and stayed there for months. I remain steadfast in that commitment to you today. Every action that AMC has taken is in direct support of that commitment, despite what the naysayers or the short sellers or those who wish us harm would have you believe. Our mission now is clear, and it's the same exact cause that so many of our shareholders joined and embraced way back in the dark days of 2020 and early 2021. You all remember the hashtag, SaveAMC. That's the report for Q4 2022. Sean, let's now move to questions, both from our industry analysts and from our shareholders.
Great, thanks, Adam. Let's start with some questions from our shareholders. There are a number of questions coming through about the upcoming shareholder vote that we just spoke about. Here's a good example. What are the implications if the vote passes? And what are the implications if the vote does not pass?
So if the vote passes, it's my expectation that this ridiculous gap between the price of an ape and the price of an AMC share will go away. And when I say it's a ridiculous gap, folks say the same thing. They have the same economic rights. They have the same voting rights. Why should an ape be trading at a third the price of a common share or a seventh of the price of a common share as it was just 2 months ago? If the vote passes, I think what you'll find is that this discounting of the ape goes away. What that means is that we'll be able to raise capital on, in my opinion, more attractive terms. Similarly, what will happen if the vote passes is there'll be a 1-to-10 reverse stock split. So you'll stop seeing the share price of AMC floating around $3 or $4 or $5 a share. The simple math is it should multiply by 10. Where it goes from there, up or down, that's a function of market dynamics. But it is simple math. You'll be trading 10 shares for one, which mathematically should be priced 10 times higher.
It's the same fucking thing.
If the votes that we're voting on at this shareholder meeting do not pass, it's true that the reverse split won't happen. But what is true is that the status quo doesn't change, which means that there still will be apes and there still will be AMC shares. The apes will continue to trade at a discount, I would guess. No one has a perfect crystal ball, but that's been the experience since August. And since our ability to raise capital is tied only to the price of the ape, if the ape continues to exist, it would seem that we wouldn't be blocked from raising capital, but we'd be raising capital on much less attractive terms. It would cause more dilution of the stock that is entirely 100% preventable if a majority of our shareholders vote yes.
Selling AMC is the same.
So here's another question related to this. It's related to the reverse stock split. And basically it says, why do we need to do a reverse stock split? Can't we just convert ape units into AMC without doing this reverse stock split?
We could, but as I said in my earlier remarks, the share price would hover in the single digits. And there are certain technical listing rules on stock exchanges. We don't think it's a good idea for our stock to be trading in single digits. And since we're going to have a shareholder vote anyway, it seemed logical to us to resolve both questions at the same time. It's expensive to call these special meetings of shareholders. It costs millions of dollars to do so. We'd rather get them both done now than have to deal with a reverse stock split at some point in the future.
We have a number of shareholders asking about their proxy materials. One example here is, I have not yet received my proxy materials from my broker. What do I need to do to be able to vote, to get my proxy materials and be able to vote?
As Bill Clinton famously said in the 1990s, for those of you who are old enough to remember the 1990s, I feel your pain. My AMC shares and ape units are at 4 brokerage firms, and I've received the voting materials from 3 of the 4 firms, but not the 4th. So if you have not heard from your broker, you should do what I'm about to do. Call them. Explain to them that there is a March 14 shareholder vote, that you own shares or units, and that you'd like to cast your vote, and they should get you a proxy. If your broker is not acting in response to your question quickly enough, email or call our proxy solicitor, D.F. King. You can reach them at an email address, amc@dfking.com, amc@dfking.com. Their phone number is 800-859-8511. All the information I just gave is for our U.S. shareholders, probably our Canadian shareholders, and international shareholders in many countries. But we are all aware, painfully, that the brokerage firms in some countries, especially in Europe, do not facilitate shareholder voting. And if you're with one of those firms, there's not much you can do other than put your shares
You could change
in a
brokers.
different broker who would allow you to vote at future shareholder
You
meetings.
could change fucking brokers if you wanted to.
And there's a question here about the lawsuit that you mentioned in your
There's enough
prepared
time now,
remarks. It says it has been reported that AMC is defending against 2 lawsuits relating to the issuance of APE units. Is this true, and can you elaborate?
Yes, litigation's been filed. We think it's misguided. We believe that all the actions we've taken are lawful. We think we have the merits in this case. It's consistent with our charter. We will defend our position vigorously, and we are encouraged that the Delaware Court of Chancery has allowed this March 14 vote to proceed on schedule.
There's some questions here about our loyalty programs, and I'll just read a few of them to you. Does AMC have any plans to revise loyalty programs and A-list memberships? For example, what about family memberships, partnerships with streaming companies, maybe a lower price for memberships with restrictions to limit frequency of attendance, etc.?
So those are all good questions and good ideas. We have been and are studying them all. The 2 of the most important marketing programs we have are AMC Stubs and especially AMC Stubs A-List. About half of our total clientele in the United States participates in Stubs, and about 15% of our total activity in the United States comes from A-List members. These are very important programs. We're constantly reviewing them for possible changes and improvements. There's nothing immediately on the horizon that would change either program other than AMC Visa Entertainment card that's going to be added, an AMC Entertainment Visa card, yeah, I said it right. AMC Entertainment Visa card that'll be coming as part of the Stubs program that will allow Stubs members to earn even more Stubs points, both when they spend at our theaters and when they spend away from our theaters. But keep the good ideas flowing. We continue to think hard about what's the best way for AMC to approach the movie going public.
Question about our theater footprint. Does AMC plan on opening new theaters in areas such as perhaps South Carolina or other states where AMC has a limited presence?
I can't make a specific comment about South Carolina, but at least South Carolina has one of our theaters. We have none in Hawaii. We have none in Alaska. We have none in Mississippi. I don't think we're in Vermont. But we do have the largest national footprint of any operator. I think we're in 43 or 44 states on the District of Columbia. We have a sizable market share in the largest cities all across the country. Plus, we have a big platform of theaters, even in smaller rural markets. We're always looking to add theaters, and you said earlier in the call, Sean, that we closed over 100 theaters that were not performing during the pandemic, but we opened up 54 new ones. And the 54 new ones were producing to the bottom line far more than the 100 that we closed. I think 10 of the 54 probably produced far more EBITDA
That's good
than
business.
the 100 that we closed.
Close 100 shitty theaters. 50
So we're
of them
always looking to
make
grow.
more fucking money than that.
We
100
can
you
grow
closed.
by
Money.
adding new build theaters from the ground up, or there's also the opportunity for us to inexpensively add into our system theaters that may have been opened by other operators who have faltered during the pandemic. Several firms declared for bankruptcy and over the last 3 years and shed a lot of theaters. And we picked up a bunch. As you know, we picked up about a third of the ArcLight circuit, which was headquartered in Los Angeles. We picked up more than half of the Bowtie circuit that was headquartered in Connecticut. Our eyes continue to be wide open. I do believe that there will be a continued opportunity for AMC to add theater locations quite inexpensively. And I might add, to do so sometimes it requires money, which is why it was so very helpful to us that we have raised over $300 million of cash from August through January. The more cash in the bank, the easier it is to make the decision to add theaters and grow.
There is a huge amount of interest in the retail launch of AMC Perfectly Popcorn. Let me read to you just a few of the questions. Can you talk more about the opportunity for AMC in retail popcorn? When will AMC Popcorn be available in the U.S. nationwide? Will AMC Popcorn be available to purchase online through the AMC website? Will AMC Popcorn be available to purchase in Canada and maybe in Europe?
That's a lot of questions. Yes, the enthusiasm and excitement for AMC Perfectly Popcorn at home is real. I see it on Twitter. When I look at the readership of the tweets I've been putting out recently on popcorn, they're sky high. The likes are sky high. The retweets are sky high. The comments back to me, every single one of which I read, by the way. I got like 4,000 or 5,000 inbound messages on the popcorn tweets recently, and I read them all. Boy, they make me excited because you're excited about it. We launched March 11th, Oscar weekend, with end cap displays at Walmart. They're almost impossible to get, and Walmart volunteered them up to us because they're excited about popcorn. And by late April, we'll be at more than 2,600 Walmart stores. That's more than half of all Walmart locations in the United States. We will have a website where you'll be able to go to find out at what locations you'll be able to actually pick up boxes of microwave popcorn or bags of ready-to-eat popcorn. We are going to sell on Walmart.com, which of course is nationwide. I would expect it will sell on AMC Theaters.com. We're discussing whether or not we should sell microwave boxes of popcorn at our theaters. Like, it's all new. We haven't started yet, and the interest level is very high. This is a nice position to be in when you're launching a new product. Let's put it this way. We're setting up our production plants to make millions of bags and microwave pouches of popcorn. We think this is a big opportunity for us. Right now, we're going to launch only in the United States. Canada is a possibility. If we did it in Europe, we would probably not do it under the AMC brand. We would do it under one of the Odeon brands. Our cinemas operate with their own distinct brands in several countries across Europe. But right now, you crawl before you walk before you run. We're going to start in the United States and see where it goes from there.
Thanks, Adam. We continue to receive a very large number of really terrific suggestions from our retail business ideas to grow and diversify and build on the business. And I want to say that just please keep these ideas coming. I think with that...
Let me just respond to that.
Sure.
What an oddity, a company that actually listens to its investors. How about that for a change? Yes, sir. You want to go to a question from an analyst, maybe?
No questions.
We're already running a little bit long, but if on this call today, but if any investor wants to ask, go ahead.
Operator, we can go to questions from analysts.
Thank you very much. We will now be taking live questions. If you'd like to ask a question, please press star 1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star 2 if you'd like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. So we have time for only one question, and we take question from the line of Eric Wold with B. Riley Securities. Please go ahead.
Hey, good afternoon, Adam and Sean. I appreciate it. I guess as much as I'm looking forward to the popcorn business being a separately reported segment, I got a couple questions on the core, the theater business. I guess first off,
hey Eric, not to interrupt, but you know what you're going to like more than how we report the popcorn results? Eating the popcorn. It's really good. We actually worked for a full year on the flavor profile of these products. They are really great.
Well, I'm looking forward to enjoying it with the Oscars. On the Sightline seating plan or program, I guess obviously it makes sense given what we've seen with other entertainment businesses. I guess what are your thoughts on where you see the biggest benefit coming from? Is it the premium on the better seats? Is it filling up the less desirable seats now that they're priced lower? Or is it that loyalty members don't pay the premium seat charges? Is the benefit driving more loyalty membership into that program?
And the answer is all of the above. You've got the three benefits of the concept, right? We can discount up front, we can charge a slight premium in the middle, and we don't charge when I say the middle, the dead center of the auditorium where most people want to sit. And if we don't charge that premium and impose it on A-listers, that's just another big value increase for A-list members, which should make more people want to be A-list members. So all three have the ability to drive improvement. And some people have looked at this as a price increase, which of course it is on day one. But what's really interesting is that we are in inflationary times. And inflationary times cause cost to rise. And without making any comment about what AMC is going to do, because it's not legal to talk about pricing prospectively, but companies facing inflationary pressures tend to raise prices, not talking about AMC. Under the pre-Sightline structure of our industry, if we wanted to raise a price in a theater, the only choice we had was to raise the price on all the seats in the theater. And so what's one of the many benefits of Sightline, other than the three that you mentioned, are that if we feel the need to raise prices, we might only do it in the most popular seats in the auditorium and actually hold the line and not raise prices on other seats in the auditorium. So it's actually a way of, while it is a way of increasing the price now, it's a potential way of preventing a price increase later on. And then there is, in fact, the opportunity to discount up front. I'm telling you, I've been looking at what we call heat maps, which are what seats are booked for a particular movie. And nobody sits in row one in a movie theater. It just doesn't happen. It could be opening night of Star Wars. Every seat in the auditorium in row 3 to 18 is booked solid, and row 1 is empty. And it really is, there is a possibility here that by discounting the price up front, we might be able to expand the movie-going market to more price-sensitive consumers.
Perfect. That's helpful, Adam. Thank you very much. Appreciate it.
Thank you. Ladies and gentlemen, we have reached the end of the question and answer session, and I would like to turn the floor over to you, sir.
Thank you, operator. To everyone on the call, thank you for being with us today. Today was a good day for AMC. We reported results that were unexpectedly positive. We introduced our popcorn line. and we've had a lot of discussion about the importance of the March 14 shareholder meeting that will simplify and strengthen the capital structure of this company going forward. Thank you. We look forward to seeing you at our theaters sometime soon.
Thank you very much, sir. Ladies and gentlemen, this concludes today's teleconference. You may disconnect your lines at this time. Thank you for your participation.
Beautiful. And disconnect our lines is what we shall do, because I don't want to listen to that shitty music. AMC has been on the Reg Show Threshold Securities List for 17 days now. Can you believe that shit? 17 days. And I keep getting the question, how is it that they haven't had to close out their positions? Well, as you can see here in my memo notepad, I've written this down. Prime brokers and others may do a buy-in of a naked short position. If they tell the short hedge fund that we're going to buy in at a certain time on, the hedge fund naked shorts into their own buy-in, or has a co-conspirator do it and rolls their position, hence circumventing Reg Show. So I remember the last time, not the last time, but a couple runs ago, when AMC and GameStop hit highs in January 28th of 2021. GameStop, I believe it was on the Reg Show Threshold Securities List for 30 days. 30 some odd days. And so far, AMC has been on the Threshold Securities List for 17 days. And we've got just about a little over 2 weeks before the March 14th vote for AMC and APE, reverse split and conversion. So I am extremely bullish on that. But as you can see here, another thing that we've written down over here, the broker-dealers do one-day lends. So these loans enable shorts to identify to the SEC the account that the shares were borrowed from. As soon as the report is sent in, the shares are returned to the broker-dealer to be loaned to the next short. This allows 8 to 10 shorts to borrow the same fucking shares, resetting the Reg Show failed to deliver clock, which makes all of the counterfeit shares look like legitimate shares. The broker-dealers charge each short for the stock loan. And in return, what do you get? What do you get when they're charging 300, 400, 500, 1,000% to these cats? Let's take a look here. Well, it's here somewhere. I just lost it. There it is. Here it is. If I click here, you can see that IBKR, for example, is getting a current fee rate of 186.9% from the shorts to lend these shares. And there are supposedly 8 lenders with inventory. And this is annual percentage rate, APR. But that's still a big deal, because imagine if your 3% or 5% mortgage all of a sudden went up to 186.903%. How much would your monthly payment be on your house from 5% interest to 186.9%? And that's using IBKR's numbers. If you look on Ortex data, you might see some as high as 300%, 400%, 500%. In just a few days, we were at like 900% average. Not the maximum cost to borrow. The average cost to borrow was around 1,000%. 1,000. Imagine that. So just think about your mortgage, for example, how much you spend on a month on your home or on your rent. And then imagine that it was 186.9% more for the year. So how much would your price go up? There would be some significant losses. Ziggity Zach, I support a reverse split, conversion, and a dilution of AMC for all of the reasons that Adam Aaron just said on this fucking stream. If you didn't hear them, go back, rewind. That's what we do these streams for. I don't have the time to be doing this shit, but I'm still fucking here doing these streams to try to educate people on the realities. And the realities are that, well, the cost to borrow on AMC for IBKR for shorts is around 186.9%. The reality is that AMC could make easily hundreds of millions of dollars in the first year alone off of this popcorn. The reality is that APE and AMC conversion would likely cause fear of missing out buying, delta hedging, and gamma squeezing. And that's not a sure thing, right? Like, I have to say this legally. I'm obligated to say that this is not financial advice. I'm not a financial advisor. I don't have a crystal ball. like Adam Aaron just got done fucking saying. But like Adam Aaron also just got done saying, it doesn't matter if I have shares that are, it doesn't matter if I have one $10 bill or 10 $1 bills. It's still $10. That's the same thing with my shares. The exact same fucking thing. In addition, all of the shares that would be removed in a reverse split would make it harder to find shares to borrow. Could potentially seriously increase volatility and could potentially seriously increase my floor and my ceiling. So there's many reasons, but I'm just going to stop right there. No, I'm not going to expand the popcorn worldwide. This is just using 75% of the expected 90% profit margins on their popcorn at 15% of the market share in the United States alone. You can imagine if it was around the entire world, well, it's like an $8 billion per year industry in the world. So if AMC does well in the US and starts to branch out to Canada and Mexico and Asia, South America, Europe, this could potentially be billions and billions of dollars per year in revenue. So that being said, I still think we're going to be filthy fucking rich, and that hasn't changed. If it changed, I would sell my shares and say, hey, peace, guys, I'm out. I just bought 1,000 shares of APE and 100 shares of AMC during that fucking live stream right here on this channel. If you didn't see it, just rewind a little bit. I didn't say a single thing, but if you're watching the screen, you saw me buy it. Just to add to my position. Continuous net settlement is the third tier of counterfeiting that occurs at the DTC level. The Depository Trust and Clearing Corp is a holding company owned by the majority of broker-dealers and has 4 subsidiaries. They are the DTC and the National Securities Clearing Corporation subsidiaries that are of interest. The DTC has an account for each broker-dealer, which is further broken down to each customer of that broker-dealer. These are electronic entities. 97% of the actual stock certificates are in the vaults at the DTC with the DTC nominee's name on them. The NSCC processes transactions, provide the broker-dealers with a central clearing source, and operate the stock borrow program. And when a broker-dealer processes the sale of a short sale, the broker-dealer has 3 days to deliver a borrowed share to the purchaser, and the purchaser has 3 days to deliver the money. In the old days, if the buyer didn't receive his shares by settlement day, 3 days after the trade, he took his money back and undid the transaction. But when the stock borrow program and electronic transfers were put in place in 1981, this all changed. And at that point, the NSCC guaranteed the performance of the buyers and sellers and would settle the transactions, even though the seller was now a failure to deliver on the shares he sold. The buyer has a counterfeit share in his account, aka synthetic shares, but the NSCC transacts as if it were real. At the end of the day, if a broker-dealer has sold more shares of a given stock than he has in his account with the DTC, he borrows shares from the NSCC, who borrows them from broker-dealers who have a surplus of shares. So far, it sounds like the whole system is in balance, except there's a shitload of synthetic shares everywhere. The short seller, who has sold naked, he had no borrowed shares. He can cure his fail to deliver and avoid the required forced buy-in by borrowing the share through the NSCC stock borrow program. This is the hocus pocus that creates millions, if not billions, of counterfeit synthetic shares. This is the same reason that I tell you guys to watch out for DRS. A lot of people still don't seem to get this. When you DRS shares, they're held in a book entry form at Seed & Company. And Seed & Company is a subsidiary of the DTC. Therefore, it is likely and possible that Seed & Company and the DTC could lend your shares out. And that's why GameStop, having a much larger percentage of DRS shares, has not seen the same stock price movements that AMC has. They've come down and have not increased as significantly as AMC, and AMC's got a long way to go. It's just a small example. That being the case, I wouldn't be surprised at all to see that Seed & Company, which is a subsidiary of the DTC, lending those DRS shares out to shorts. And because of the DTC stock borrow program, debits and credits go back and forth between broker-dealers, and they only deal with the net difference. It never gets reconciled to the actual number of shares issued by the company, as long as the broker-dealers don't repay the total stock borrowed and only settle their net differences. This process is called continuous net settlement, and it hides billions of counterfeit shares that never make it to the Reg Show radar screen, as the shares borrowed from the DTC are treated as legitimate shares. And as you can see here, AMC has been on the threshold securities list for 17 days. 17 days. Lawrence Cap says GME is at 17 days to cover. That's true, and that's because GME has a smaller float. And if AMC goes through with their reverse split and conversion, AMC will also have a smaller float. Will have much harder to borrow shares. It will be much harder to locate shares with which to do these nefarious practices. Damn. We're gonna be filthy fucking rich. I don't even have to say. I don't even have to say anything else. Like I'm done. Do your own fucking due diligence. Don't take my word for it. Go look for it up yourself. Fuck.
So goddamn rich.
God damn it. Jerome Powell's gonna have to get that fucking money printer out, bro. What sound does that money printer make?
Bruh, bruh, bruh.
That's goddamn right. Have a great night, people.
J Squad.
Janet Yellen, Jerome Powell, get the fucking money printer out.
Gonna be so goddamn rich. I think it's time to blow this thing. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
Thank you, Cash Money. You are the fucking rich.
Bruh, bruh, bruh,
I want my
bruh.
fucking money. Woo. Thanks for subscribing. If you wanna learn
Griffin,
more,
I want my fucking money. Yo, motherfucker.
Fucking rich. God damn.
So goddamn rich.
Holy shit, we're gonna be so fucking rich.
Great.
Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't you?
yelling, give me the fucking money. Get the goddamn money printer out.
Great. The bounty cutter.
We're gonna be so fucking rich. Get the goddamn money printer out.
Yeah, that was a lot of fun, guys. Thank you for hanging out with us during this earnings call, February 28th, 2023. I wish you peace and wealth. I'm going to get this fucking bread. I don't know about you. I'll wait as long as it takes.